Good morning, everyone, to those joining online, and welcome to this update. We need to discuss this, on the face of it, fairly boring tax court judgment, but it does raise important principles regarding the timing of tax deduction. You know, one of the biggest things I've heard over many years, dealing with various professionals that also happen to come across tax work from time to time is, you know, when it's a timing issue, it's not a big risk. Wear and tear, timing doesn't really matter. If you get it wrong, it doesn't matter. The full amount is deductible. It's just a year of assessment thing. It's not that complicated. It's not a big risk. It's a small risk. This judgment just again, there are multiple others, but this judgment just again goes to show that this is not, it's not just the timing risk. It is a major risk that could result in penalties, and indeed you forfeiting the deduction altogether unless you take the right route. For those of you who don't know me, I'm Unicus. I'm the Managing Director of Unicus Tax. This training is intended for my staff. For those of you joining online, it's for your interest's sake only. Let's get straight into the facts of this case. So the taxpayer operated as a licensed distributor of fuel during 2011 to 2015 tax periods. It bought fuel from various manufacturers and then sold it, right? It paid certain excise duties and levies, which as an exporter, it was potentially entitled to claim back in terms of the Customs and Excise Act. But how the Customs and Excise Act works, I'm not going to pretend like I know this. I know this from the judgment only, is that you're supposed to claim your refunds within 2 years, right? That's what's supposed to happen on this fuel that you purchase. So what had happened is their clearing agent failed to prepare and forward the refund claims that it was entitled to. And it had paid the customs and excise duties in 2011 to 2013. That's where the refunds, or that's what the refunds related to, were duties, etc., incurred over the years 2011 to 2013. But because this guy didn't claim it, eventually those claims had become prescribed. Right? So in other words, you have no right anymore to claim against SARS for the customs and excise. Now, the trouble that the taxpayer had is at the time they did the returns for 2011 to 2013, the portion that they thought they were able to claim back, they didn't claim that as an expense, right? Under 11A as part of its trading stock under Section 22, right? But what they did then is when the claims prescribed, which they said was in 2015, they said, I'm claiming the 38 million rand as a loss in the 2015 year of assessment when those claims prescribed, because they didn't claim it on 2011 to 2013, right? Right, and so the taxpayer said, what's wrong? Did I skip something? So the taxpayer said, all right, look, I'm entitled to this deduction of 38 million rand in 2015. I'm not trying to claim expenditure that's old now. It was a loss actually incurred in 2015, and that loss arose by virtue of the claim becoming prescribed, right? And before prescription, the claim was still alive. So they were trying to make the deduction fit under losses, because you'll recall that 11A says that you can claim as a deduction expenditure and losses, and there's a difference between the two, right? And the difference really comes down to whether or not the deprivation of assets is voluntary or involuntary, right? An involuntary deprivation of assets is a loss. A voluntary deprivation of assets, if you will, is an expense, right? And they said, well, you know, it became time barred and time prescribed, and therefore it's an involuntary deprivation, and therefore we want the loss, and we want it in 2015 when the claims prescribed, because before that we still had the ability to potentially go and claim that back. SARS, on the other hand, of course, as you can imagine, said, no, you are conflating two very separate things. First, you had an unconditional obligation to incur this fuel and excise or excise duties when you bought the fuel, right, under 11A. The fact that you have a statutory entitlement to a refund claim is not relevant to the fact that you've got an unconditional obligation or had an unconditional obligation in the years that you incurred it, which is 2011 to 2013. Right, and so I said, well, the expenses belong there, and you can't shift it to 2015 by calling it something else, by now calling it a loss. And then bear in mind that tax is a yearly event, and they must have claimed it in 2011 to 2013. Right? They didn't say that in so many words, but they say the expense does not belong, or the deduction does not belong in the 2015 year. It belongs in the earlier years. Failure to claim in the earlier years does not create a later year deduction. Failure to lodge the refund claims does not convert expenditure into a loss, and SARS insisted they're entitled to a 10% USP. So you can see here, look at the issue here. This is simply somebody somewhere in 2011 to 2013 told, or presumably the taxpayer took the position to say, I can't claim this, right? Or as a tax expense. I can claim it as a refund, right? But the clearing agent is now the one to blame for not claiming it, apparently. But they took the position that they're not claiming it as an expense, right? And then when it's prescribed, they claim it later, and the SARS said no. And nobody is suggesting here, not that it's explicitly said, but nobody is suggesting here the expense is not deductible. It's a question of when is it deductible. And often you'll hear people say, yeah, but it's just the timing thing, so I can't penalize you because there's no loss to the fiscus. Those arguments are nonsense. People always defend taxpayers all the time, and into litigation as well. There's no loss to the fiscus points will get you nowhere. If you do, you're lucky. But if we get to proper litigation, the court's going to say, I don't care whether you think there's a loss to the fiscus or not. The expense does not belong in 2015. And so therefore, there's a penalty. It's the same with the loss argument. People arguing there's no prejudice to the fiscus. But anyway, the court obviously upheld SARS' assessment and said no. The 38 million rand is not deductible in 2015. It upheld the 10% penalty, right? So it's just a timing thing. So it's not just a timing thing. There's a 10% penalty, despite the fact that the question is not necessarily the deductibility, but it is the year in which it's deductible. And so the basis for the judgment, I think, is fairly straightforward. The expense was incurred in 2011, 2013, right? And the guys conflated, so I don't want to go through that again. And I think that's fairly clear. I want to get to the VAT analogy, because when you read this judgment, people tend to go, but hang on, what about VAT, right? Because when I claim for my expenses, let's say I'm a VAT vendor, right? Because this is a typical knee-jerk reaction, which I just thought, the judgment doesn't deal with it, but one might sit and think, but hang on, how is this different from a VAT claim that I didn't claim, but I didn't claim the income tax deduction on the VAT portion of the invoice because I was entitled to claim it, right? And then I forfeit that claim 5 years later, right? Can I then make the argument to say that the VAT input tax that I was supposed to claim that I didn't claim, why can't I then claim that as an income tax expense then? In fact, we all know that if taxpayers turn out not to have been required to claim or not to be on register, or there's an adjustment to the input tax apportionment, is often where this comes up. So the apportionment ratio is long. So your input tax ratio becomes less, and so there's a higher income tax expense. And nobody will say to you, no, you can't claim that additional input tax as an income tax expense now. So why is this different in the customs and excise? Well, the reality is unfortunately, unlike I suppose the Customs and Excise Act, Section 23C says that you can't claim it if you're entitled to claim it, not whether you claimed it or not. Section 23C says if you're entitled to an input tax deduction, then you can't claim it as an income tax expense, right? Not whether you claimed it or could have claimed it and didn't claim it, if you claimed or you could have claimed. So I just wanted to make that point, because when I discussed this internally with some of the other guys, the knee-jerk reaction was, hang on, this judgment seems like it's contradicting the VAT treatment. It might seem that way, but it doesn't, because the VAT Act does read differently. So there are a couple of takeaways here, right? Two main takeaways. The one is first of all, obviously get the year right. Get the year of assessment in which the expense is incurred correct, because it is not just a timing thing. It's not just a deferred tax thingy that we're just going to put there at the back of the financials and nobody's going to care about, right? It can lead to penalties if you get it wrong, even though it's only a timing thing. Wear and tear is a typical example. 24C is a typical example. And the takeaway from a dispute resolution perspective, when I look at this case, my question is, why did the taxpayer only place 2015 under dispute? Why did they not argue for 2011, 2013 in the alternative? Were they 100% convinced that the expense is only deductible when it's prescribed, or did they not think about it? Or, most probably, was there perhaps some form of procedural obstacle in their way? The most obvious one being prescription, right? Why are you going and seeking a claim in the 2015 year that relates to an earlier year? So the first thing you want to do is when you look, and we had a dispute like that, which we're trying to wrap up at the moment, and we will probably succeed, is the year in dispute is only 1 year, right? I forget the year now, but it's probably best that I don't remember the exact year, right? But we look at the expense, and we look at this facts, we say, well, look, this is actually a Section 24C thing, which, although this is the year in dispute, it cuts across the entire contract period, which is the last 8 years. So if I just fix this year, I'm going to, or depends on what the answer is in this, is going to depend on what we do in the next years. So should we put the other years in dispute? Should we do it at VDP on the other years? What should we do? Because you can't look at these things in isolation. You have to consider what are all the potential issues. And by the way, this case that I'm referring to on the 24C thing, nobody raised 24C. That was the last ditch effort to save this expense of the taxpayer claim, right? Because everything else failed. And it seems like we got that one over the line, but that one necessarily has implications across various years, which one needs to consider and decide what years do you add. So perhaps in this case, they could have objected to those, right? But the biggest problem, most probably, especially when you're dealing with guys who come and say, I missed expenses in the past, your biggest obstacle is almost always prescription, right? Or the 3-year time bar, which is not the same thing in Section 1045, or the 80-day and the exceptional circumstances, you won't get condemnation, right? So you might end up in a situation where we say to each other, okay, this is not a question of whether the expense is deductible, it's a question of which year. So you put all your eggs in one basket and you dispute 2015, right? Turns out you're wrong. Turns out it should be in an earlier year. Can you now go back and check, because that's typically, and this is not in the judgment, this is my analysis of the judgment saying, okay, what would I do if I were in a similar position and the court confirms that the expense was incurred in 2011 to 2013, in fact, SARS argues as much, right? I will go back and say, well, then the earlier years contain a readily apparent undisputed error, right? You've just said, now, that becomes difficult. And I had a whole article about the ICAT judgment because it's the same kind of thing. And the Avenir Wine Estates, I had a 4-part article series on my website about 93(1)D. But the point is, the SARS might argue that, no, I didn't become aware of the fact that there's an expense deductible in 2011 to 2013, right? I simply said that the expense was incurred in that year, and that you had an unconditional obligation in that year. I might still have an issue with it's in the production of income, or it's not for the purpose of trade. And I know that when I say that, there's people sitting there thinking, come on, Niku, you would be surprised. The sorts of defenses you get all of a sudden. I mean, so you can raise this, and I would raise 93(1)D, and I'll say, well, depending on the timing of when this action was launched in 2015, if it was launched before the 2011 to 2013 assessments as prescribed, I'll use 99(2)D3 to get around prescription. I'll say it's readily apparent undisputed error. You must reduce the assessment on earlier years, right? But there's still another way that you can do it. I just want to skip to the next slide. There's still another way you can try and use it. This is the ICAT judgment. I have a whole article on the ICAT judgment on my website, and it's very similar in principle if I think about the post-judgment takeaway on this. So the court said the expense is in 2011 to 2013. My question as a dispute resolution expert is, okay, fine, how do I get it then? Right? Because I'm not walking away simply because you said it's not here. I can get it. So then I'm going 93(1)D, 99(2)D3 as a way to get around prescription. We've done that many times, and this case might even stand out as an easy option. But just to remind you briefly the facts in the ICAT judgment, right? What happened there is the taxpayer had disputed, I forget the years, but the principle is the same, right? So they disputed 2015. And then there was a settlement agreement signed with SARS, right? Where SARS said there's a portion of this expense that relates to 2014, and there's a portion of this expense that relates to 2015. We will allow and settle the expense on 2015. Then the taxpayer said, okay, I want to reduce the assessment then on 14 because we claimed everything in 15 and you said a portion belongs to 14, right? And SARS said, no, we can't change 14 because 14 had become prescribed, right? And then they took that on review to the High Court, which is the ICAT judgment. And interestingly, the court in that case said that the mechanism to get around prescription in that case on the 2014 year of assessment was 99(2)D1, which reads that SARS can act post-prescription if it's necessary to give effect to a dispute resolved in terms of Chapter 9. But my comment at the time was this: with respect, I think that's wrong, because the 2014 year in the ICAT judgment was never placed under dispute. There was no Chapter 9 objection or appeal or anything, right? So you can't use 99(2)D1 as a mechanism to say, oh, the 2015 has been resolved. Clearly there was a dispute on 15, there was an objection and an appeal, and we followed the Chapter 9 processes, and then we signed a settlement agreement. Now you want to say you want to use 99(2)D1 to also reduce 2014. imagine the consequences that might have, which is exactly, if I were in these guys' shoes, I'll use ICAT to say, well, in that case, SARS, I can use 99.2D1 to say that 2011 to 2013 is also not prescribed because it's necessary to give effect to the judgment of the tax court that said that this is here, so you must reduce it. All right? That's how I would consider challenging the deductibility of those expenses. So guys, yeah, that's the judgment. Like I said, these sessions are supposed to be short. The judgment in itself just confirms the importance of getting the timing right. From a dispute resolution perspective, the question is always, and this is unfortunately something we see often, not in my office, but elsewhere, is people tend to put disputes in boxes, right? So I'm only looking at this year, which is right, because that's the year where the assessment is. But you must ask the question, what other years are potentially affected by this, and what alternative arguments do I have, right? I have here 2015 in dispute. I want to claim it as a loss. It's not a bad argument. It's a respectable argument. It's a loss actually incurred because the claim prescribed. So it's just, but what if that fails? Which is why when you look at our cases, we have often 100 pages objections with 7 or 8 or 10 different alternative arguments, right? Which of course you can do. If you phrase it correctly, then you can do that. And I found that sometimes you win on the first argument, sometimes you win on the last. And so it's important that when you consider dispute strategy that you take a holistic approach. And then in circumstances like these where you end up, stuck in this kind of unfortunate conclusion that you've got the wrong year, then consider the IK judgment in 99.2D3.